Alright guys, it is a beautiful Saturday morning. We are headed to a card show, and while we do that, I want to talk about some psychology tips. I've gotten some questions and concerns from my members, so hopefully you enjoy. Here's some nice cool car sounds, and let's get straight into it. Alright, so first thing I want to talk about is overanalyzing and hesitating. This is a big one, and it really just comes down to having belief in your model. For me, this was done through forward testing. I just threw myself in the fire over and over again, and over time, I gained confidence with my model because I saw it work over and over again, all the 100-point trades, 50-point trades, and that really just built conviction in myself and in the model. Now, the other way you can do this is basically by back testing. Some people in my community, what do? They take the checklist, they run it through hundreds and hundreds of simulations and hours of back testing. They put all the data in a spreadsheet, and once they find the numbers and they see that, okay, this trading strategy really has a good win rate, that gives them confidence, because now every time they go in a trade in the live markets, they can remember and look back and say, okay, I've done this back testing before, I've taken this trade hundreds of times, I know that this has an edge and this has a high win rate. And hesitating is a really big thing, because sometimes that's the difference between a profitable trader and a non-profitable trader. Like at NASDAQ, for example, moves super fast. And a lot of the times I'm on stream calling a play out or saying I'm in a trade, and there's a ton of people who hesitate. They're trying to figure out their contract size, et cetera, et cetera. And what's going to happen, they're actually going to miss that trade. I'm going to get that trade. And now our P&Ls and the rest of our week outlook is going to look drastically different. So that's why I think it's super important. You need to back test or forward test, whatever works for your psychology, so that you can gain conviction with the strategy that you're trading. So when the moment comes in the live markets, you execute, you have full faith, and you're not second doubting yourself. And again, this isn't going to happen overnight. So don't just think that by watching this video or any video, you're going to stop hesitating and fixing your psychology. You know, experience is the best teacher. For me, it took like 12 to 13 months. It could be different for everyone else. So just keep that in mind. It's going to be trial and error, keeping up with the same discipline and trying over and over again. You will eventually get to a place where your psychology improves. Next thing is FOMO and overtrading, and these ones are super common. The way I got through with it is just putting my blind faith in a mechanical model and basically telling myself that here's my checklist. These are the trades that I am willing to take that I know have a statistical edge, and any other moves in the market do not concern me. So there are going to be times in the market where I miss a move and it's going to be super painful and the market dumps or pumps 1,000 points. But guess what? If there was no trade in that move that fit my checklist, that move wasn't for me and it doesn't concern me. And again, that takes time, just seeing price move and being numb. But I promise you, when you can get to that point, your clarity on the charts is going to skyrocket. I'm at a point in my system where I just execute like a robot. I come in, did my model present itself? Yes. If so, I take a trade. If not, I move on until the next day. You need to treat trading like a business if you want to be successful in this thing long term. Because if you treat it like a gambler or like a form of dopamine, you are not going to last. You'll win here and there. Everyone's going to get lucky. But over time, over a large sample, you are going to get exposed if there are holes in your system. I'm going to try to open up this bad boy a little bit. And to talk about overtrading, it's very, very simple. You need to stop comparing yourself to these guys on social media. They're cherry picking screenshots. It's just like Instagram. They're giving you the perfect scenario. They're not showing you all the blown accounts. They're not showing you the mistakes. They're only showing you the stuff that gets clicks, and that in itself can give you FOMO. So again, what worked for me was, instead of looking for home run plays every day or something that could make my P&L look super sexy, I committed to base hits. I'm just looking for 1, maybe 2 trades a day, get your green, and get out of the market. Because the more time you spend in the market, the more fatigued you're going to get. Your mental toughness and your sharpness is not going to be as good on trade 1 as it is on trade 5 or 6. You know what I mean? So That is my plan. I try to trade within a specific window. I usually find 1 or 2 setups in that window, and then I'm done. I don't care what happens later on, a couple hours later. It doesn't concern me. I'm trying to just be as flawless and make as little mistakes as possible. So yeah, the people who sit there and they try to scalp 100 trades back and forth, all the way until the market closes, that's just not going to work, especially for me and what system I trade. Again, you can hit 2 trades and they're winners and you're feeling great. And then your third trade, you're like, you know what? Let me try to get a little more profit. Now your third trade, you lose. What's going to happen? You're going to try to trade a 4th one, try to make that money back you just lost, and you know how it goes. That's going to easily spiral into a blown account and tilt. Another topic I want to talk about is how to get out of a losing streak. This is really important because it's going to happen to most of you guys, and this is where journaling comes in. For me, when I was trying to become profitable, I journaled when I was winning and I journaled when I was losing. This is a really common misconception, that you only have to journal when you're unprofitable, and then when you finally taste some profitability, you've quote unquote unlocked the game and you don't have to journal or study as much anymore. This is completely wrong. Journaling while you're winning is almost as important as journaling while you're losing, because you can literally see what you were doing right, what you were doing wrong in those times of success. And if you ever lose those moments, you can go back and say, okay, right now I'm on a 3-month drought, but back on my month 4, I was winning consistently. Let me go look back and see what kind of trades I was taking and what my thought process was during those moments. So that would be my advice to get out of a losing streak. They're going to happen. Trading is a game of probability and variance. You're going to get on hot streaks. You're going to get on cold streaks. The goal is just execute the edge as robotically as possible and not let your human emotions, play into it. So journaling is super big. Journal when you're winning. Journal when you're losing. It's going to help you and give you some perspective, and that's really, really important. Let's talk about how to trade in volatile conditions. So this is kind of a up and coming recent topic. The market has been super volatile recently. The government shutdown just ended. Every single day on the NASDAQ, the morning range is like 500 points. And if you're not careful, this can really kill you quite quickly. My best advice for this would just to be size down. The 20 points of yesterday is now currently the 40 points. You know what I mean? It's just that simple. We're not getting the same ranges. We're getting elevated volatility. And the best thing you can do is adapt. You can size down, hold for bigger moves, and even let the volatility play in your favor. So for example, I typically look for 8 to 15 point fair value gaps when I'm taking an IFVG setup, right? And I trim at 20 points. That is typically my go-to. Well, in an elevated volatility, when all of the fair value gaps are 30, 40, 50 points, what am I going to do? I'm not going to run those same 10-point gaps because the volatility is going to kill them and they're not going to be respected the same way they were during normal conditions. So as a profitable trader, I'm simply going to adapt. Instead of 8 to 15 point gaps, I'll look for 15 to 30 point gaps. Instead of trimming at 20 points in profit, I know that the market is super volatile and every single candle is like 50 points or 40 points. I'll just hold for longer. That is how you adapt and survive in any trading condition. And that's what it takes to be a profitable trader. Holding trades and not being finicky is another one that I've seen a ton of people struggle with. For me, I like to hold runners. My system allows me to catch 50, 100 plus point trades if I really catch the start of a reversal. So runners can pay out big. I can make $200, $300 just off one micro, and this usually happens every single week. But what happens to the new traders, the beginners who are not used to holding runners, is they'll get in a trade, it will be a winning trade, and they'll get so excited looking at their P&L, looking at the trade work, that they'll touch the trade prematurely. They'll either trim too early or get out, not hold runners, and this is severely capping your upside. When we talk about risk to reward, we look at what is your average winning trade and what is your average losing trade. And the simple formula to determine if you're a profitable trader is by making sure your green days are bigger than your red days. And what's going to happen is every time you catch a huge winning trade, trade, if you cut it prematurely, your risk to reward is going to be capped, and it's going to be that much harder to be profitable at the end of the month. So this is just another thing that I got better with experience. You just need to see the trades go 50, 100 plus points a couple times or maybe over a month, and that is going to give you more conviction, like, okay, you know, I've sat in this dude's community, or I've been on the charts for a month now or a prolonged period of time. I know that these trades can go up a huge amount. I just need to take some partials and then let my runners run. And I kind of have this like emotionless attachment to runners. Once I take my first TP or my first trim, I secure some money for the trade, and now I say, where's my next target? Here's where I'm gonna be for my next TP, or here's where I'm gonna set my next limit order. I am not going to touch this trade no matter what. It's either going to hit break even or TP. Because a lot of people have this like hindsight mentality where when their trades go back to break even and they had runners, they think, oh, you know, I should have trimmed more. And that is just hindsight thinking. Holding partials is okay. It is a viable strategy as long as you have clear targets that make sense. Sometimes those targets are going to hit, sometimes they're not going to hit. Just because they didn't hit doesn't mean it was the wrong decision. If you did it in a mechanical way, it was the right decision, because the times where you do hold runners and you're up 100 points or 200 points, that is going to pay for itself for the week, for the month, and that is the difference in your P&L and your risk to reward. Last thing I want to talk about is having patience. Trading is a patience game, and a lot of the time trading is boring. You see so many people on social media posting short form content where they're freaking out, the numbers are going up and it's exciting with sound effects, and it almost feels like the trading is like a casino. And this is a completely wrong interpretation and representation of the industry. A lot of profitable traders sit there, they wait for their setup, they wait for all of the things to line up because they know that is the best time to apply their edge, and they're going to have the best win rate doing so. A lot of the times I will get on stream at 9:30 and we won't take a trade until 10:30, 11 a.m. or even later on in the day. And is it boring? Yeah. Do I want to take a trade in front of hundreds of people and make money together? Of course. But I still need to be smart, and I need to risk my money when it's the best time to do so. And you don't always have to be in a trade for trading to work. This is something that as a beginner, I had to deal with and that I struggled with. I felt like I had to make money as soon as possible. I had to be green for the day as soon as possible. And that, once again, is just not the case. Whether you find a winning trade at 9:45 or whether you find a winning trade at 3 p.m., the result is the same. You are going to end the day green between you and your competitor, whoever you're trading against, let's just say as an example. So it doesn't matter when you catch the trade. You just need to be as patient and as picky and disciplined as possible to give you the best chance and say, okay, is this a quality setup? Do I know that this setup has an edge? And would I be happy taking the setup even if it lost? Those are the questions you need to be asking yourself. I've worked with over 100 people in the last year in my private community, and psychology is definitely the biggest thing that people struggle with. A lot of people understand trading, they even understand the system that they're trading, but when they get into the live markets, when there's money on the line, it is a completely different animal. So those are just some of the topics. Hopefully you guys enjoyed. All right, guys, I just made it to the card show, so I'm gonna wrap up here. I'm gonna go do some business, and then we'll probably report back. When I get back to the crib, we'll show you what we bought, and I will be back. Hopefully this goes well. Yeah, there's a ton of people here. All right, guys, to end off the video, here is the card we picked up. If you don't know anything about Pokemon, this means nothing to you, but this is one of the final pieces to the Pikachu or Pokemon Munch set. There was 5 cards released exclusively. It's based on a painting. These are super rare, super expensive cards, and this was one of the last cards I needed. And the crazy part is this bad boy right here cost $7,000, just this little thing. And I know, it seems crazy. And I'm not trying to do this to brag or anything. I'm just trying to show you some motivation. If you can really succeed in this thing, you put in the work, you can benefit and reap the fruits of your labor. You can buy a car, go on a vacation, spend money on Pokemon cards. You know, when I was a kid, I used to go to the store every single weekend and buy Pokemon cards with my grandmother. And now that I got some big boy money with these prop firms, I'm able to just spend money on Pokemon cards. And for me, it's an investment. It is on the riskier side of investing. I have safe investing, which is real estate, long-term investing. That's my safe stuff. And then I have a little bit of riskier investing, which is, again, Pokemon cards. I started coming up on a year. I am up, you know, thankfully. I don't really want to make any money. I just kind of do it because I like to collect cool shit. But, you know, guys, whatever you want to do, whatever is your reason for doing this, just keep going. The potential is absolutely insane if you can succeed in this thing. And I'm truly, truly blessed to be in the position I'm in. And I'm super happy I didn't quit. So we'll see you on the next one. Take it easy. Peace.